Morning traders, Paul here with GammaEdge. Today is Monday, July 17th. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today, the short-term market models have turned off. Both the CT and the railroad track pattern, which you'll understand here shortly, have both moved to an off status. No new entries are anticipated today in our representative portfolio models. Long-term market model, which is appropriate for folks who are looking at a little longer term and not the intraday or the short swing trades, remains in an uptrend. We have another continuation day up today. The key takeaway, I think, for everybody is just to understand that pullbacks within an overall longer market are very healthy, and we are looking here to see some consolidation but remain above the ribbon. The too long didn't read for the week. It is OPEX week. We have a significant amount of in the money and out of the money call delta dominated strikes above and below us. So that's overall that is bullish and is indicated with a positive movement in price for the day. We are indicating seeing some data that shows us that Tuesday could be slightly weaker. Just be aware of that. That being said, with a put domination on Tuesday, but very low liquidity down some levels. It depends on where we end the day today and how we get positioned into tomorrow. We do see 45.50 as possible this week, but we also see below 44.80 and possibly even going lower. We are seeing growing short-dated out-of-the-money put exposure increase below us, and that is usually in preparation of a downside type of movement. From a transition perspective, we closed at 45.05. This was actually indicated Friday with the Vol-U and the Vol-D commands within the Discord. If you're not using those, would urge everyone to take a look at those. They can really help you understand where the targeting is going on through the day. The PM settled complex, which is literally the dailies. P-Trans is at, it should say 44.90, not 45.90, sorry about that. And minus trans is 44.70. I think that's important because that's a little bit wider than we like to see, not as well defined. And the combo complex, P-Trans 44.75 and minus trans is 44.30. So again, we're a little bit stretched above that. We would not be at all surprised if we had a little bit of a pullback. So just be aware of that, but also be aware 4,500 is a big number. It's got gamma, it's got delta, it's got all sorts of stuff. And because of that, it's going to be a real key line today as we play above and below that. If we can stay above it, those calls, because it is call dominated, those calls will be in the money, and especially on the 0 DTE, they will have influence. Speaking of the 0 DTE, plus trans 44.95, this is a short dated, this is just looking at today in isolation, minus trans 44.90. So very, very tight, 44.95 to 44.90. We're above this at 45.05, so delta below us is really strong into the pre-market. This is a solid bullish foundation from which to build today. It really depends on who shows up today. The 0 DTE plus GEX and COI are coincident at 4,500. Now this is a little below us, of course, and so they're in the money. They will be growing in deltas throughout the day. That'll be very, very important. That'll be important also from all of the puts that are below us in terms of charm, as long as they remain out of the money. 4,500, can't stress enough today, is a big number, and how we play that today will be important. We are relatively neutral, maybe a little more call dominated today. We have a tight transition. We can break either way, and we would not be surprised at this. All of this said, 45.45 is a valid upside target. We do look for stalling above this. We don't see us making that 45.50 target for the week. It's always possible. You have to watch the Vol-D command to get a sense of the distributions, and the Vol-U command to look at how they're positioning for the overall week. Note if we break below transition, 0 DTE transition at 44.90, we could accelerate towards the 44.60s. We see a lot of put dominated gamma there. There's some pretty significant charm that's sitting down there that if we push that charm and drop below it, it'll become overhead resistance and will continue to push deltas in the wrong direction. For the Discord members, as always, watch the SPXP07 with the VALU command, as well as the VALD SPXP. That'll isolate just the PMs, and it'll help you understand the distributions that we're seeing here. Just want everyone to know that last orange line at the bottom there, we see a low probability developing weakness in the 1DT. This is for tomorrow. We do see some potential to get trapped in this 4465, 4485 zone, which is below today's transition. There is a scenario in the if-thens where this could occur, so just be aware of it. And we think we could go as low as 4445. If we do get trapped, especially in the afternoon session down there, we don't think we're going to be able to recover into the close. Taking a look at the market model via the cumulative tick, I won't go over all the details here, but I painted out effectively where we were all last week, why trend following can work, why the system works, and how you should be positioning. If you're not understanding what all this TC18, TC21 is, we've written an extensive document within the Discord, and make sure that you read that so you get a good feel for what the different states are and what they mean. They actually align with our portfolios very, very well, and they help you get into the trade on the appropriate days, specifically a trigger day. All the way on the left-hand side, you can imagine that if you got in there when we had that trigger day, and we had a three-way trigger that day, that last week would have been a banner week, and many of the members within the Discord experienced that. To the right-hand side of this, watch for short-term resets. You can see now that the bolded white cumulative tick is weaker on Friday. A lot of profit taking going on. And now that it's below what we call the railroad track pattern, you can see it's going to start pulling that railroad track pattern over, causing it to invert. As long as it remains above the colorful ribbon that you see, we'll be in good shape. This back tests extremely well, and want everybody just to realize that we are in a longer term up cycle until we're not, right? That's the beauty of trend following. Nothing on this chart is predictive. No trend following system is ever going to tell you where the future is, but there is momentum. So just be aware that having smaller cycles within longer term cycles is very possible and highly probable, and this is a system that can help you see that. Taking a look at the various gamma levels that we're watching, you can see that we've got green deltas to the right, to the left. Both in the left-hand side is the SPX PM settled complex, the right-hand side is the combo complex, which is the AM and the PMs, looking very, very strong. Taking a look at the PM settled complex, which is just the dailies in isolation. At the very, very top, you see that 46.65. That is the JPM strike. That is the end of September. End of September, already appearing, very real, not liquid, but has a definite impact on the overall trading and what's being exposed in the structure. We do see that little node up there at 45.65. I put an X there, but for the most part, the deltas are green above us, the deltas are green below us. This is an out of the money, in the money call delta dominance. When we have something like that, generally, we will continue on that path until we see further weakness, and you'll see what that starts to look like in the following slides. 4,500 is indicated as plus GEX. You can see that on the left with the green dot on the left. And on the same line over on the right-hand side in the blue area at 64,000 call contracts, you can see we actually have COI, which is the call open interest. When these are sitting on top of each other, 4,500 becomes a very, very important strike. You can see we're just above it. So right now, that call domination is in the money, and it will continue to grow in deltas. That's important. Taking a look at the 0 DTE, first of all, up in the upper right-hand corner, that yellow box, even though it says 5,000 contracts there, the net gamma dollars and notional is virtually zero. I mean, this is within the noise floor. Just be aware, we can flip either direction here. And when you couple that with the blue box, which is the transition area, we literally can go either direction. So just be aware in the 0 DTE, if we can stay above the 4,500 strike, which also is indicated as plus GEX, as well as the 0 DTE COI, We'll keep those calls in the money, and that'll be supportive, but if we drop below that, they become out of the money, charm will flip, and we start getting more and more pressure as we head down. You can see that 44.80 all the way down to 44.60. We see a scenario where if we drop below transition and get caught up in that 44.80 and below, that we actually could get pulled down or pushed down towards that 44.60. Depends on what happens with the intraday vol-D commands, and so watch that. Now, 2X's in the middle of the page there. This is a 0 DTE, but those are delta nodes, and what we see often is parking at those zones. So we would not be surprised if we do push north that we would park into the overnight at 45.20 or 45.30. We think progress above 45.45 today is not really going to happen unless we see specific targeting all the way up that really negates that that negative gamma that's sitting up there at 45.50, or that put dominated gamma that's sitting up there. So just be aware of that. Also note that delta up there is pretty significant too. The 1 DTE fat transition, you can see that plus GEX on the left, 45.25, and minus GEX 44.45, pretty wide range here. You can also see that plus GEX is above COI. That typically does not last, whether it's on a major structural thing or a single day like this. This is the 1 DTE for Tuesday. The red box in the upper right hand corner shows us we're starting to get into a little more of a uncertain territory. This is a put dominated expiry for tomorrow. As long as we remain above all of those red bars that you see, that's red gamma, the charm will be supportive. That'll be good, but you can also see there are some scenarios there that if we get caught up down in that lower area below, say 44.85, all the way on down to 44.65, we could have a challenge there, so just be aware of that. Taking a look at the crystal ball for the balance of the week, again, 45.65, got a red X sitting up there. We do have a clear runway all the way up, no nodes that are visible there, so no obvious parking spots, as many of you are aware how we look for these and how they materialize. So we could move higher. You can see the 45.50 is indicated as a pretty strong strike for the week. 45.25 at the quarter level is still there. And then of course, like always, 4,500 remains dominant for the week. What we don't like is we don't like that big blue box. That big blue box shows some uncertainty for the week in positioning. Sequencing for the week will be important. How we drunken sailor walk towards the expiry on Friday will determine where we are. Now I know that's obvious in its statement, but it's really true, because if you think about the skier going down the mountain, having to navigate the different gates as they go down, it's really what we're looking at this week, and how these strikes come off day over day is going to be really important, and that sequencing is going to be important. So if we can stay above 4,500 for the week, we'll probably start grinding north until the latter part of the week, until the structure goes away for next week. We don't think any higher than this 45.50 with the given structure is possible. We do see the potential of falling back into transition, especially if we lose the 4,500. And you can see there are a number of nodes in that 44.30 to 44.80 zone where we could actually pop down there, and we'll just have to see what happens. Below the 44.30 down to 4,400, not expecting it, but it is possible for us to at least fall into transition. Taking a look at the combo, which is the AM and the PMs. Again, here's that 45.65 number again, showing us that node that's up there. We have a very clean structure. Out of the money calls to the north, which means there's a lot of puts or a lot of call speculation going on. And then in the money call speculation to the south. So this is very good. Green deltas above, green deltas below, with the exception of that 44.65, and of course you can see the JPM all the way up at the top of the page at 46.65, which is the end of September. It is not material in the context of being liquid, but it certainly does have an influence on gamma, delta, etc. within the overall structure. Last slide here, a couple things to note. So first of all, right goalpost 4,500 unchanged. We're slightly above this. We don't normally stay like that, so just be aware. To the downside, on Friday we did see minus GEX move down from 42 down to 4,000. We are still there. The magnitude is the same. We did have a reduction in the right goalpost up at 4,500. That's profit taking that we saw into Friday. So no surprise there. Prices are relatively the same, so you know it was profit taking. That green box that I've put there, it's relatively unchanged in magnitude. So the upside speculation for calls is very much still in force. The short-dated nature of these things remains in force, and that's that's effectively why we have a market. Do want to highlight that sloped red line at the bottom there. We are starting to see a normal distribution of put gamma. Now what that means is generally when the market is positioning, you're dealing with literally millions of people or millions of transactions that are placing their bets to the downside. This normally looks like a bell curve type of distribution, not a wall. And we're starting to see this. This is the first time we've seen something like this in several weeks. And this actually is healthy. It is what we would envision as liquidity coming back into the complex. And as a result of that, we have confidence that if we do pull back below that 44.35 line in the sand, there will be enough liquidity that is developing below us to be supportive. It doesn't mean we can't pull back. It just means that the people who are speculating to the downside right now will be present and will take their profits as we move down into that area. Why is that important? It's the closing of those puts which will actually provide liquidity and actually start forcing us upward. So just be aware of that. So that's it for today. If you have any questions, comments, want to come in, kick the tires, go to GammaEdge.us. Upper right-hand corner of that web page is a pricing tab. Fill out the blanks after you click on that. Come on in for a 14-day free trial. You will get an email from LaunchPass. You must send a code to LaunchPass. Don't post it in the forum. Don't post it in the Discord. Send it to the LaunchPass bot, and you will be in. Now, once you are in the Discord, you'll have lots of tools to play with and a new version that we are getting ready to release of the web app, which will be yours to use as you go forward. So the charts you saw today, many of those will be available to you to run at your discretion whenever you want and not have to rely on the admins to do that. On Twitter, follow us at GammaEdges, and then here on YouTube, two things. If you like today's commentary, give me a thumbs up. It gives me immediate feedback. I'm trying to change the format a little bit. We've gone from double-digit thumbs up to single digits, and so I'd like to get back into the double digits. And then, of course, subscribe to us so that you get notifications next time we post. So with that, I bid you farewell. Make it a great Monday, a great week, and we'll hope to see you in the Discord. Thanks.